everyone. Welcome to today's ETF Spotlight. I am Cynthia Murphy, investment strategist at Vetify. And today I'm so excited. I'm joined by Andrew Tudor, who's an investment advisor at Zenith Wealth Partners. Andrew, welcome to the show.
Hello, glad to be here, and thank you for the intro, Cynthia.
Andrew, let's start, with a little bit of a history of your practice, of how you approach markets, a little bit of give us a flavor of your investment philosophy. Tell us your story.
Absolutely. I'm with Zenith Wealth Partners. We're a little over 6 years old. And really, the mission of the organization was to make sure that race and gender don't predetermine financial success. A lot of our clients are either families of color, individuals of color, women-led households, and we also serve nonprofit family foundations and operating nonprofit organizations that have a specific mission to make a more equitable society. And so most of our clients, we have, like I said, two sides of the house. One, individuals and families. We're doing full out financial planning, investment management, estate planning, tax planning, all of those things for our clients to make sure that they're building wealth, really wrapped into a mission of making sure that we're accessible, approachable, and making sure that they're growing in confidence because a lot of the folks that we work with are first-time wealth accumulators in their families. And when it comes to our investment philosophy, so on my team, I sit on the institutions team. Most of my clients are family foundations, operating nonprofit, corporate foundations. And what we find is that, when they come to market and own their foundation portfolio, they're doing grant making a lot of times with 5% of their portfolio. And then the other 95% is typically invested traditionally in stocks, bonds, mutual funds. But a lot of times they have a desire to make their investment philosophy mirror or at least, be connected to or aligned with their grant making arm. And so for a lot of those clients that we work with, we're analyzing their grants, we're understanding their mission. We're having a lot of conversations with their stakeholders, the board, or their executive team, and we're crafting an investment strategy and then managing a portfolio that fully aligns with the investment management or the mission of the organization. And we love that. And what we find as we do that is that all investments have an impact. The question is, are you aware of the impact of your investment portfolio? And is it the same desired impact that you have for your organizational goals?
So I love everything about the idea of inclusion. We've talked so much in the ETF world, for example, about the beauty of broadening market access. So I love to hear the story of that's the mission. I love the concept of impact. So when you think about, from a framework of as we, are in this transition, a new year, new calendar year, what clients are focusing on, what are the concerns? It sounds like from your practice perspective, you live in a world of customization in a way. Different folks at different, not only spots in life, but levels of financial education and literacy, demands, mandates, all of that. So how would you characterize what are some of the key concerns clients you are helping today have about markets and investments and mission today?
Yes, great question. So I would say first and foremost, we have folks who have already accumulated. We think about those foundations, family foundations, and also in that space we have retirees, so people who are living on their assets as well. And their number one concern is how do we make sure that we don't run out of money? I think that's a core concern. I think it hits to the heart of anyone who's worked for a pot of dollars, and they have goals and they have a mission for those dollars and they want to see those executed well. And so that's where our planning comes in. That's where a lot of our great modeling comes in. That's where our asset diversification really starts to shine and making sure that we can weather, all four seasons of a market cycle. When it comes to the individuals and families team and a lot of our folks who are accumulating dollars, a lot of those conversations come to what are the most efficient ways to accumulate dollars? How do we mitigate taxes, whether inside of the portfolio or outside of the portfolio? and what are the things that we want to make sure we're doing from a behavioral standpoint to give ourselves the highest probability of success, whether that's the savings rate, whether that's the spending rate, whether that's the investment selection that we have, and making sure that in markets like we're experiencing this year and what we expect to be in the next few years, where we are seeing a lot of volatility, how do we fortify ourselves to make sure we're making good decisions and not being pulled in separate directions and making really mistakes that we can't recover from by either being overly aggressive and overly confident. We've seen a lot of that over the last few years, or being overly fearful based on a bad day or a bad week or some news cycle that moves us to make a decision that we might regret.
Yeah, it's just been, I think it's interesting. I feel like we live in this era of uncertainty. We just throw that word around because from policy to economic growth to monetization of AI to Fed and interest rates, it's everything feels like it's up in the air all the time. It can go either way. So the idea of how do you manage that, capturing as much upside potential, generating as much income possibly, protecting capital on the downside, it's really challenging. Is there any big trend or big thematic opportunity, big story that you're really focusing on, say, in the next 6 months?
Absolutely. We've really been watching the strength of the dollar. The dollar losing strength is, in our analysis, drove a lot of the international growth from markets that were held in dollars, and the dollar falls, and so we had great years from the eurozone and from other places internationally, and we see that trend continuing as well. And so we want to make sure we're broadly diversified geographically, but also making sure that we are dialed into what that means for our international exposure and how do we get the most out of that exposure without giving up the upside of what is the American market, which we've seen huge AI infrastructure investment. We've seen growth rates for some of the largest companies in the U.S. market just dwarf anything internationally. And so we want to make sure we have exposure, but we're not overexposed. Because that overexposure comes from just a hyper concentration of the indexes in the U.S. market, specifically the U.S. large cap market. That less than 10 of the largest players are dominating and moving markets from a day to day, week to week, and year to year basis. And so, how do we have exposure to AI without pinning our hopes and dreams on AI alone? How do we expose ourselves to international markets to make sure that as the dollar moves, we have really great opportunities and really great, valuable companies internationally? And the third trend that we're seeing is really how do we craft out and put the right parameters around our alternative investment offerings. So in the private markets, we've seen specifically, just the public markets are shrinking and shrinking and shrinking. The amount of publicly available traded companies on exchanges has been shrinking since the 1980s. And a lot of the highest growth companies that are in the U.S. market specifically are experiencing a lot of that growth while they're private before they IPO. And so, not only from an exposure standpoint and reducing risk by having privates, but also the upside of having private markets in our portfolio are very important. And that comes with private equity, that comes with venture capital, that comes with any cryptocurrency that we might talk through diversifying into. Precious metals have had the best year that they've had in a very long time when we look at gold and silver. And so we want to make sure that we're incorporating all of these things into a broadly diversified portfolio so that we know when we wake up in 10 years, whether it's a retiree waking up in 10 years or an organization waking up in 10 years, that we can weather these storms as we know there's going to be a lot of volatility as time goes.
Yeah, to the takeaway for me is the robustness of your portfolio is requires a lot of moving parts. So, which makes me think about markets like this that are challenging, uncertain, volatile. They really test investors, but they also put the importance of good financial advice in sharp focus. So, from your perspective, if you're out there, if you haven't really accessed markets, you don't know where to start. you're looking for that good financial advice, what's a good place to start? How do you even begin that process?
I think we underscore the importance of trust in this process. Whether it's an organization or an individual, we are asking them to give their life savings, sometimes their family's generational savings or an organization's generational savings in our hands. And I think that takes a level of transparency, a level of patience, and a level of trust that our industry can continue to evolve in and that our clients are asking us for. And so I do think we need to give people time to get ready to hand over the keys to their dollars, but also having the conversation that the best time to have invested if you're sitting on the sidelines is yesterday. The second best time is today. We have all of the data that we can share, stories that we can share, really helping clients to understand that it's not about timing the market. It's about how much time you have in the market. And so we want to get in as early as possible and stay the course. One of the funny things about investing is that investors sometimes want the gains for free. And when we think about anything else that's important, personal growth, physical growth, we know that there's pain for those gains. You have to pay a price for the gains of the future that you like. And in investing, that price is the volatility. That being able to endure the pain of a bad week or a bad quarter and stay the course is the price that you pay for the investment returns that we might put in the investment policy statement, or when you imagine the future that you like for your family and for your foundation. And so we have to make a portfolio that someone can stomach through the downtimes and then help coach them through adhering to and pushing through the pain so they can have the gains of the market. And all of that comes to the point of trying to time it is not the strategy we're looking for. We need to make the decision, create the portfolio in the right way, and then build our psychological fortitude through the volatility that we're inevitably going to experience while we invest through these markets.
Time is really your biggest asset. And if that's really the case, then the best investment is the one you can stick with long term. So it's interesting how it actually does work, folks. It does work.
It's simple, but it's difficult, but it's simple.
So let's talk a little bit about exchange. As you know, we have Exchange, the ETF conference coming up in March in Vegas. I know you are part of our advisor council, which is such a valued partnership for us at Verify. The advisors who join us in the council bring so much insight and leadership, and it's just a phenomenal experience. I wanted to hear from you. How did you get involved with the advisor council? How did that come to be? What excites you about that experience? Tell us a little bit about that.
Yes. So this shout out goes to our founder, Jason Ray, colleague and our chief investment officer as well. He sat on the council last year. And as a part of him serving on that council, I attended my first exchange last year as well. And so it was a wonderful experience. I actually sat on a panel talking about mission aligned investing and values based investing for families and institutions. And so that was kind of my driving force of how I was introduced. I found myself really learning more in the investment space at the conference this past year than I had in any other conference. First we had industry experts who were, writing market commentary on a regular basis and, studying, managing ETFs and what they were seeing and how they were putting together their strategies. That was extremely helpful. But also we heard from peers, portfolio managers, managing families, endowments, managing family funds, what they were thinking about, what their fears were for the next couple of years, where their opportunities lied. And from those sessions and from those discussions, we took those things back and made some changes in some of our portfolios that really worked out for our clients over the last, 8 to 10 months. And so, first and foremost, I really appreciated just the depth in some of those sessions and wanted to be able to help in any way possible. And they asked me to join the council, and I'm glad I can hopefully give that same experience to another group of advisors this year.
No, I think that's one of the most wonderful feedback I have heard, Andrew. I love to hear that. As we go into this next year, I know we talked about some of the big trends, the big themes you're watching, debasement, all of that. Is there a particular topic? Is there a particular friend? Is like, what are you looking forward to the most come March in Las Vegas this year at Exchange?
Yes. I am looking forward to seeing great people, great peers. The community is outstanding. I've forged some great relationships with other folks on the council that I'm excited to see in person and spend some time with. I am really ready for the market commentary. We talk a lot about clients and individuals experiencing a lot of noise and having to decipher between good advice and bad advice. Uh, and it's just as difficult on our end as well. There is a lot of noise. My email, I wake up each morning and have 25 people tell me what's happening in the market and their viewpoints. And it sometimes can be tough to know which trends to spend time on, which manager funds to listen to. A lot of ulterior motives floating around as far as why their strategy is statistically the best strategy. And so I'm excited to learn from some more third party folks, from other peers who don't really have a product dog in the fight, but really are trying to craft resilient, uh, you know, prosperous portfolios for clients, and just learn from what they're doing and ask questions and get better.
Yeah, I love that. I feel the same, like we all learn better together. Collaboration really is great. Listen, I want to thank you so much, Andrew, for being a part of the Advisor Council, for all the contributions you make to the conversation, to the education, and congrats on that mission focus and the broadening of market access. It's a beautiful story. I look forward to seeing you in March in Las Vegas in person. And thank you for today's conversation.
Thank you, Cynthia. I'm excited for March as well.
Folks, thank you for joining us today. For other episodes of ETF Spotlight, check out etftrends.com and see you in Vegas.